Alright, welcome back to the channel. So today we're going to be checking out a macro perspective on Bitcoin, and for this perspective we're going to be looking at Elliott wave theory. Now, before we do jump into this video, I would just like to say I have never covered Elliott wave theory before, and it is not my favorite type of analysis. I believe there's a few things wrong with it. You can draw waves in very subjective waves, kind of like how you can draw Fibonacci retracements in subjective waves. However, Elliott waves are a whole nother level of subjectivity within themselves. However, in my channel, I do like to provide an alternative perspective. I do like to provide multiple perspectives so we can see what's going on in the general picture as to remove any biases that we may have. So looking at this in the long term, let's jump into this Elliott wave theory. Now, if you've never heard of Elliott wave theory before, this is basically the theory. It is the theory that markets move in these waves and troughs. And the basic theory is we have three impulses and we have correctory phases during these impulses. So you can see we have impulse wave 1, impulse wave 3, and impulse wave 5. The impulses are always odd numbers and the corrections are always even numbers. So you can see on the corrections we've got 2, 4, and then after we top out of 5 we go into an ABC correction. Now, how do these markets move? You can see from the bottoms they move in bullish stances 1, 2, 3, 4, 5 ABC, and in a bearish stance it's the opposite way. We go in the complete opposite way, really. We go like 1, 2, 3, 4, 5 and then ABC. But nonetheless, this is how we move, and within these greater waves rather, so you can see this impulse up to 1, this impulse to 3, and impulse to 5, you see we have these smaller correctory phases and impulses within these greater moves. So for example, on the first impulse you can see we've got a 1, 2, 3, 4, 5, impulse 1 done, ABC, coming down to 2 for the correction. Then we build up 1, 2, 3, 4, 5 up to impulse wave 3 and an ABC correction. And this is very well defined most of the time in the crypto market. So in today's video, now I've given you the basic rundown of Elliott wave theory, I want to show you the case for the bulls and the case for the bears. So if we start off, you can see we've got our first impulse down here. I would argue this would be our wave 1. We've got an ABC correction down to wave 2. Then I would argue we have wave 3. Now, here is where we get very subjective on this, and I'm going to start with the case. I'm going to start with the case for the bears actually, and then we'll move on to the case for the bulls. So the case for the bears would be calling that this was your impulse 1, your impulse 3, and your impulse 5, and this would make sense because you can see we've got a big impulse, we've got our ABC correctory phase, we have our big run up to the third impulse, and we've got an ABC correctory phase, and this one, I believe this is something like an A, B, and then pretty much a straight flush down to C, to be honest. If we look at the first impulse as well, you can see these are meant to move in 5 waves. As you can see in the first impulse, we've got a 1, 2, 3, 4, 5 wave and an ABC correction, just to show you how these work. So if I zoom in on this, you can see if we count our 5 wave from the bottom, I would count this probably to this first impulse. So 1, 2, 3, 4, 5. And then if we come down to our correctory phase, you can see if we pull up the AB, is this AB, ABC? Yeah, if we pull up an ABC, I would argue we've got basically a big move down to here, a big impulse up, A, B, then a big move back down to C. And you can see these are how the markets move. They move from the first impulse, 1, 2, 3, 4, 5, and then they move down. You can see big major impulse to the downside, impulse to the upside, and impulse to the downside within these major waves. So you can see, you've got your 5 wave in the first wave, ABC correction, and then within this you would have another 5 wave. I'd probably do this from 1, 2, 3, 4, 5. And then, as you can see, like I highlighted before, if we zoom into the third wave, we would have the top, then we'd have an A, B, C correction down to the lows here. So I do think Elliott wave plays out a lot of the time, but like I said, there's a caveat, and it's, you know, how do you draw the Elliott waves, because they're very subjective. And like I said, I'm going to do the case for the bears to start with. So in Elliott wave theory, like I said, we have these macro moves. So for the case for the bears, we've got an impulse 1, 2, 3, 4, 5. What happens after our 5 wave? We have a correctory move A, B, C with a 1, 2, 3, 4, 5 wave coming down to B, an A, B, C correction up to B, and then a 1, 2, 3, 4, 5 coming all the way down to C. Now, I don't want to make this video like exceptionally long. I'm not going to like count every A, B, C, every 1, 2, 3, 4, 5 I see, but as far as I can tell in the case for the bears, if I was to draw an ABC correction, I'd say we have a pretty concrete A down here. I don't think anyone could argue that. And then we would have a B here. And as you can see here, we'd be coming all the way down to C. And in terms of the macro market structure, this always puts C below A. So if we come over to our chart, you can see we saw our last bottom down here on A. I would expect this to, you know, you could argue the case for the bears as well was already done, ABC correction done, but most of the time we break back below the 4 wave and we come back more or less to the first impulse of the 1 wave. So the case for the bears on these Elliott wave theories is we'd be coming down to anywhere between 14,000, which I think is way too extreme anyway, or a more likely case for the bears if we draw this down to 28,000. I think that's much more likely. And normally these cases from B to C, the same with the 5 wave and the 3 wave, they don't come down as much length as normal. So if we do draw this out, this would have to come down less than the previous move that we just done. So I think the 28,000 bottom that the bears are calling from, which would put us technically just below our 4 wave down here, is very valid. But like I said, I'm providing you a perspective on both markets. I personally do not agree with this, with the bearish interpretation of the Elliott wave theory on this chart specifically. But nonetheless, it is something that we do need to keep in mind, because, you know, it is very, like I said, the caveat of Elliott waves is how do you draw these, because they're very subjective. Now, let me show you the case for the bulls. So the bear case is, you know, the C wave, the correctory wave would bring us all the way down to approximately 28,000. You can see we've got our 1, 3, and 5 impulses, followed by an A, B, C correction. Now, I personally don't think this is what's going to play out. How I personally would draw this, even though it is arguably a little bit wonky and a little bit more ugly, would be if I get rid of this, something like this, where we would have put in our 4th wave here, and our 5th wave would take us up to, you know, somewhere around about this region. Bear in mind, with 5 waves, the same as the ABC correction, the 5th wave is never as long as the 3rd wave. So if we draw this over and extrapolate, this would be predicting a price target if we did the same 3 wave up to 96,000. So I think, you know, potentially 85, 90 is a much more realistic price target. But where would we pull like a concrete target which is backed up by something if we were looking at these Elliott waves? And this is where I'd probably use Fibonacci retracements. If we come over to the daily, draw from the high to the low down here, let me just make sure this is the low. I'm pretty sure this is the low. Yeah, all the way down to the low here, you can see our highest Fibonacci extension target would actually be up here at 4.236, predicting a price move, if these Elliott waves are going to play out for the bulls, of an increase up to 73,500. Now, does this tie in with anything else? Because we've got a high and a higher high up here. Well, if we draw this over, we could actually see some somewhat correlation approximately around the 75,000 price target. Now, it is kind of taking its time to get there, but if we do kind of start building up momentum over the next couple of months, you could potentially see us coming up into the top of this trend line, you know, hitting into 76,000, and then for the Elliott wave theory, anywhere between this 75 to 85,000 would personally be the top for the bulls. Now, I personally think that would make a lot of sense. And, you know, from an unbiased perspective, I personally do think Bitcoin is going to go to 100,000 this year, if not next year. But I like to be a contrarian trader when I can, because I've noticed in my years of crypto trading that most traders are wrong. Most retail traders will be wrong, and that's how the markets are designed. The markets are designed to take the most amount of money from the most amount of people most of the time. And you might be thinking, how is that right? How can most people be wrong? That doesn't make any sense. But what most people don't realize is, you know, you've got your one or two whales, and you've got a bunch of retail traders that don't know what they're doing down here, and all of their money gets fed into the whales who do know what they're doing. And that is basically how crypto works. You know, the whales make the majority of the money and just siphon money from the retail traders. And you might be thinking, well, that's a lie, that's never happened. What happened when we were in this top at 69,000? What happened when we were coming into the 14th of April? What happened when we were in November and December of 2020? If you weren't in crypto at that time, I was. And I remember what everyone was saying. I remember everyone was saying 100k by the end of the year, 100%. Every single trader, every retail trader was saying 100k by the end of the year. And then we didn't hit it in that year, so we had a correction, and people were saying, oh, 100k in the summer, 100%. We came up to 69,000, everyone got euphoric again, and everyone was thinking, you know, we're going to go up in a straight line, we're going to take out the all-time high, 100,000 is in the table in the next couple months, and we didn't hit it. We came right back down. So this does make a lot of sense to me. While personally I think it would make sense for Bitcoin to go higher than 100,000, like I said, I like to provide multiple perspectives from an unbiased perspective as well. I like to get as many views as the market as I can, so I can formulate a informed decision based on not emotions but unbiased data. And from what these Elliott waves alone are saying is that Bitcoin would not make it to 100,000. It would make it up to 85,000, and depending on how you draw these, I mean, you could draw a Fibonacci extension, which would take us into 100 and 200,000. I'm personally not the biggest fan of those. Nonetheless, this is really all I've got for the Elliott wave theory. What theory do you believe in? Do you think that this was your 3 wave, this was your 4, and then this is going to be our 5 impulse, making Bitcoin, you know, come all the way up to 85,000 or higher potentially, in your opinion? Or do you think that this was the 3 wave, this was your 4th correction, and then this was your 5 wave, and we are about to see something like this, where we have an A, B, and then take out the lows, C, and as always, the C wave brings us below the 4th impulse. So this would be predicting a move below 29,000 in the short term. What do you believe in? Do you believe in the bears? Do you believe in the bulls? I personally think the bearish chart looks nicer, but I think the bullish chart is going to play out where this was our 4th bottom, and we're going to come up to, you know, at least 75 to 85,000. I want to know your opinion. Let me know what you think below. I'll be making a short-term update on the short-term price action in Bitcoin anyway after I make this video. So that's all I've got for you. Once again, not financial advice. Cowboy out. Peace.